Hello, today is July 26, 2010. It is 12:15 p.m. We have a great looking trade on the USD Chief 1 hour chart. We've been waiting for this trade all of July, so I don't know if it's going to hit or not. We shall see. You can see here that I'll go ahead. I'm actually going to move I like having this empty space here, but for recording purposes, I will move it over. Okay, now we're over here. So let's zoom in and see what we have. Okay, I'm gonna get rid of this, get rid of that. And you can see we had our trade set up here. Boom. And high there is 0563, 63. Yeah, 75 is good. 60. 73 is good. Okay. So we had a really nice setup. You can see that this buy entry is above all of our fractals here, even over here. Now it's not above these. You can't see that. It's not above this area, but that's okay because if it hits and bounces and goes into a range or whatever, and then keeps going, hopefully we'll be able to move our stop up to break even, and it won't matter. Even if it does bounce and come backwards, we'll be at break even most likely. So that doesn't matter. And then all we'll do is set up the next trade. If it does come up and bounce, all we'll do is set up the next trade up here and we'll take it. You can see that here, this is above all this here and all this over here. So this is a really good entry. And it's also a really good area for an add-on. We'll see what happens. Can't see into the future. So great entry, great stop. Price has gone this way, opposite direction. So our stop would be lower now. But when I was looking at the trade last night, this is what I was looking at. Buy here, stop here, and target way up here at, you can see all this area is what I'm looking at. Okay. And if I move over some more, you can see that it's a lot of resistance at that area at 1.1673. So we have a great setup buy of USD Chief buy stop at about 1.0568, stop at 1.0485 area. Target is 1.1727. So a little bit higher here. 1727. That's good. Pick that up to there. Beautiful. Okay, so this is our 100% up here at 1.1722. And this is our 80% area. You see that this is our entry. This is about halfway point. This is 100%. So this is about 80% area here. And you can see that that place of add-on here is pretty good because that's about the 20% area. So that's a good area for add-on if we decide to add on in this area, which I will go ahead and put a add-on marker here. Bring that down just a smidge. I like purple, so I will make it purple add-on. And there you go. Now we have our add-on, and that's a little bit of resistance. So our pip risk is about 83 pips. Our target is 1,159 pips. Let me repeat that. Our target is 1,159 pips. Do not be scared of a large target, and do not be scared of trades that are going for over 1,000 pips. In pound yen, we could go for a trade that's 10,000 pips. So our reward risk ratio is 14 to 1. Now, that being said, you're going to find, I'll get to that point in a second. So it's 14 to 1 reward risk ratio. So again, if we risk 1%, we have the opportunity, notice I said the opportunity, to gain 14%. If we risk 2%, we have opportunity to gain 28%. So therefore, we really need to risk 2% on this trade. So that's exactly what I've done. Now, check this out. If this trade were to hit and make it to exit strategy, not only would we gain that 28%, but we'd also take another 2% at this add-on here to gain another probably, let's see, 10 to 15%. So that's quite a bit. That's 28, so 30, about 40% on two trades. So that's the beauty of having your reward risk ratio and only taking trades that matter. Do not take little trades with 1-to-1 reward risk ratio, because if you take 100 trades, if you take 100 trades and you lose 50 and you win 50, and you have a 50-50 win-loss ratio, which isn't bad at all to have a 50-50 win-loss ratio, you will come out at break even, and that's not good. But let's say we take 4 trades and we win 2 and we lose 2. However, our winners are 5-to-1 reward risk ratio and higher, and our losers, of course, ours is just going to be the 1%. We're going to be up because we're going to lose 2% and we will gain 10%. So therefore, we'd gain a total of 8%. 10% minus 2% in losses equals 8% total. So that's a really good trade. Now, one more thing before I close up here. In the stock market, we're going BGU long, which is S&P 500 long. So therefore, that's going totally opposite of this trade here, because the euro dollar, if that goes long, most likely the stock market is going to go long. And USD chief, it goes opposite usually of euro dollar. Usually USD chief is the inverse of euro dollar. So therefore, if euro dollar goes long, USD chief goes short. So therefore, this trade may not even happen. This trade, this USD chief trade that we're taking in Forex, is totally opposite and going against everything that we're going for in the stock market, because we want the stock market to go long. But that's just the way it is. I'm taking, these are two different charts, two different markets, and even though they're going against each other, I have a trade pending on this, and I have a trade that got hit on that BGU to go long. So therefore, you can see that I keep my charts separate, I keep my market separate.